Hi everybody, this is Jeremy from FairShares. Okay, so today in this tutorial we're going to be talking about this tax deduction amount here. What is $6,400 in tax deduction? What exactly does that mean? Well, this is the tax deduction that you would need to claim to have fair taxation. This is the tax deduction that you need to claim on your 1099 DIV if you don't want to be overtaxed on the income that you actually earned. Okay, so how do we arrive at this? Okay, so in previous videos, you know that all or a portion of the first distributions you receive from an income producing security represent a return of your capital post purchase. That 6.4K, that represents the amount of the dividend that you receive that represents a return of your money and should not be taxed. That $6,400 should be excluded from taxation on your tax forms in order for you to be taxed fairly. So that's what that is. That is the tax deduction. That is your return of capital amount. Now, I would caution you to just take that and stick it on your 1099. It's not that simple. I wish that it was. We spent a lot of time on RoboTax to understand exactly how all these tax deductions work, when they can be taken. There's all kinds of wacky boxes on your 1099 that need to be adjusted to properly reflect taking the tax deduction. So unfortunately, it's not as simple as slapping that on your 1099 and calling it a day. It's a little bit more complicated than that. But again, FairShares has RoboTax, and RoboTax does all this work for you. And we're working very hard to get RoboTax in the hands of every American. Something that you can do to support us is to subscribe to our channel, share these videos with your friends and family and your investment managers, ring the bell so that you can be notified when we release new videos, new tutorials, new products, etc., etc. You can also follow us on Twitter at FairShares Inc. So tax deduction, that is your return of capital amount that you're being unjustly taxed on. Thank you so much. Talk to you soon.